Lithium Americas stock ended its two-day slide on Thursday with a small but welcome gain. The stock closed up 17 cents or about 2.16% to finish the session at $8.04 per share. While the move itself may seem modest, it came at an important moment for the company and for investors who have been watching to see whether momentum would return after a brief pause. Today we're going to unpack what's going on with LAC, what's driving the latest price action, the company's newly announced at-the-market equity program, and why the broader story still looks bullish even with some short-term volatility. To start, it's worth remembering how far the stock has come in just the past 2 weeks. Lithium Americas has been on a powerful run since the U.S. Department of Energy confirmed a 5% equity stake in the company and its Thacker joint venture with General Motors. That announcement set off a re-rating across the market, moving LAC from a speculative lithium developer into what many now see as a cornerstone of America's domestic critical mineral supply chain. The stock soared from around $6 to over $9 at one point, delivering more than 50% gains in a single week. That kind of explosive upside almost always leads to some profit-taking and recalibration afterward, which is exactly what we saw earlier in the week. Thursday's rebound marks the first sign that buyers are stepping back in to defend the $8 level. This is significant because $8 has now become a key support area on the chart. It's also where value-oriented investors tend to re-enter after the profit-taking by short-term traders. The fact that the stock bounced from those levels and closed in the green shows that underlying sentiment remains positive. Now let's talk about what may have sparked renewed attention in the stock. Lithium Americas announced a new at-the-market equity program that allows the company to raise up to $250 million through controlled share issuances over time. This kind of program, known as an ATM, gives management flexibility to raise capital in small increments as needed, rather than through one large dilutive offering. It's a financial tool used by many capital-intensive companies that are in the development phase of major projects. At first glance, any mention of share issuance can make investors nervous because of dilution. But in this case, it's important to look at the broader context. The Thacker project will cost billions of dollars to bring online, and while the Department of Energy loan covers a substantial portion of that through the $2.26 billion funding package, the company still needs working capital and flexibility to manage construction costs, equipment procurement, and operating expenses. An ATM program provides that flexibility without requiring LAC to take on additional debt or rush into an unfavorable financing deal. In other words, it strengthens the balance sheet at a time when execution matters most. From a strategic standpoint, this move aligns perfectly with the government's involvement. By having both federal backing and a major automaker as partners, LAC can now raise incremental equity from the market with confidence. Investors know the project has institutional and political support, which reduces risk. The fact that the company is pursuing measured capital raises rather than large, one-off dilutions suggests that management is thinking long-term and prioritizing stability. It's a bullish sign that they are managing growth in a responsible way. The market's initial response to the ATM announcement has been fairly balanced. Some traders sold on the headline, viewing it as a potential overhang, but others stepped in, recognizing that controlled fundraising signals readiness to move from the financing stage to the execution stage. This tug-of-war between short-term traders and long-term investors is normal after a major corporate development. What matters is that LAC held above $8, indicating that buyers were comfortable absorbing any short-term selling pressure. The broader lithium sector also provided a helpful backdrop on Thursday. There was renewed strength in critical mineral stocks following reports that China was tightening export restrictions on certain rare earth elements. Those restrictions are interpreted by the market as a catalyst for Western producers because they highlight the need for domestic supply chains. When global tensions rise, strategic assets like Thacker gain value in the eyes of policymakers and investors. So even though LAC's move was relatively small today, it was part of a wider rebound in sentiment across the sector. From a technical perspective, the $8 level is becoming the line in the sand. If the stock can continue to close above 8 and gradually build volume toward 8.50 or 9, it will confirm a new consolidation range forming after last week's volatility. The next major resistance zone sits around $9.50, with $10 remaining the big psychological barrier. Breaking through those levels with volume could reignite momentum and attract algorithmic and institutional buying once again. On the downside, if the stock were to slip below $7.80, the next area of support lies around $7.20, which coincides with the earlier base before the government stake announcement. The real story here is the shift in investor psychology. The confirmation of the US stake and the Department of Energy loan restructuring removed a huge uncertainty from the equation. That changed how the market values Lithium Americas. Investors are no longer asking whether the project will be financed, they're now asking how the company will execute and how profitable it can become once production begins. That's a very different narrative, and it's one that tends to support higher valuations over time, even if there are short-term bumps along the way. Execution will be the key focus moving forward. The at-the-market program, combined with the DOE loan, gives LAC the financial runway it needs to advance construction without constantly worrying about liquidity. Management can now concentrate on operational milestones, things like equipment orders, environmental compliance, and workforce expansion at Thacker Pass. Each of these steps brings the project closer to production and helps de-risk the story further. Investors should keep an eye out for several upcoming catalysts. The first will be the company's next SEC filing, which should provide additional details on the warrant structure of the DOE's equity stake and possibly on the parameters of the ATM program. The second will be any new commentary from the Department of Energy or General Motors about timelines, offtake schedules, or additional funding tranches. Positive updates from either of these partners could reignite the next leg higher. The third catalyst will come from the broader lithium market itself. After a prolonged downturn in lithium carbonate prices, there are signs of stabilization, and some analysts expect prices to rebound in the coming quarters as EV production ramps up again. Any recovery in lithium pricing would strengthen the long-term case for LAC even further. While traders may focus on day-to-day fluctuations, long-term investors are likely viewing this period as accumulation territory. Government involvement, industrial partnerships, and flexible funding create a trifecta of support that few lithium projects can match. The company has effectively positioned itself as America's flagship lithium producer in an era where supply security is a national priority. That positioning gives the stock a structural tailwind that goes beyond short-term trading cycles. For now, volatility will likely remain elevated as the market digests the ATM program and monitors share issuance activity. But as long as the company executes cautiously and communicates transparently, the long-term trajectory should remain upward. Investors tend to reward companies that balance growth with discipline, and so far Lithium Americas appears to be doing just that. In summary, Lithium Americas closed Thursday at $8.04, up 17 cents or 2.16%, ending a brief two-day decline. The bounce reflects renewed confidence as buyers step back in around key support levels. The company's new $250 million at-the-market equity program introduces flexibility to fund development while maintaining control over dilution. The fundamental story remains intact: a 5% U.S. government stake, a $2.26 billion DOE loan, and a partnership with General Motors make LAC a central piece of America's clean energy supply chain. The next catalysts will be SEC filings, partner updates, and sector sentiment in the lithium market. Despite short-term volatility, the big picture for Lithium Americas remains bullish. The company has moved from uncertainty to execution, from speculation to strategy. Each step forward adds credibility and intrinsic value to the story. As long as it continues to deliver on milestones and manages capital prudently, LAC is well positioned to become the defining American lithium success story of this decade.